Let's see if Bankrate's Ted Rossman can explain it to us. I think you're going to sound a little bit less optimistic than Lawrence just did, maybe, Ted. How would you kind of read the consumer in the landscape right now?
Well, maybe we'll keep the optimism going. I actually think that the economy is better than a lot of people realize.
Really?
We know that sentiment is really depressed. People are worried about continued high prices. They're worried about tariffs. They're uncertain about all this. But the unemployment rate is still quite low. We've seen some stabilization as far as delinquencies on credit cards and auto loans.
Because this is exactly the place people are going. They go from the sentiment to the delinquency data, and they say then it's going to show up in the hard data, and you're saying let's not get ahead of ourselves.
Well, we're still sorting through the weirdness of the pandemic aftermath. Credit card delinquencies were really, really low during the pandemic. Then they went up a lot to the highest point in about 15 years. But they've really leveled off from there. We're seeing something similar with auto. The situation's a little more dour for auto, largely because prices have gone up, insurance, interest rates. Subprime auto is a bit of a problem, but at least with credit cards, banks are feeling pretty good. I know spending has slowed, but some of that was by design, just to bring inflation down. The unemployment rate is still low. That's a big indicator.
Where would you first see these signs of deterioration? It's amazing what you're saying, that people are holding up this well with rates as high as we just showed them.
Right. You ask people how the economy's doing, and they generally say not so well, but actual spending has been good. Now, it's been propped up by higher prices, and people are starting to pull back a little bit. I would really look to jobs as the biggest indicator here. If people have jobs, they tend to buy things and pay their bills. Banks don't seem particularly concerned about these delinquency levels.
So the levels that we're seeing have ticked up from kind of extraordinary lows during COVID. Is that what you're saying? We need to just kind of keep that in context. They're not at levels that would be traditionally considered worrisome.
That's right. And it's really the pace of change that has slowed in recent months. And I think that's emboldening banks a bit. We're actually starting to see some credit card marketing offers ticking up a little bit. Maybe some of that's related to the slowdown in travel, trying to get people excited. There's very much the K-shaped economy at work here, too. If you have good credit and a good income, credit is flowing very freely. The cutbacks we've seen have been more on the margins, people with lower incomes and lower credit scores.
But not in a way that you think is a macro event, basically, or kind of telling us that this is starting there, but perhaps going to spread?
Right, not in a worrisome sense. In some respects, this is a have your cake and eat it too kind of environment for lenders, because people are spending. More people are carrying balances at higher rates, which is very profitable for the bank,
right,
but then they're actually paying it back. So the delinquency rate is not to a point that they would be worried about that.
That's super interesting. And what it makes me think is maybe the Fed's not, if everyone's talking about how we can handle this just fine, why would the Fed keep cutting rates here? That's what it makes me wonder.
That's right. Yeah, it looks like they're on the sidelines probably at least until June. Now, we'll see beyond that. Lots of uncertainty with tariffs and more time for other data to come in. But higher for longer is kind of the dominant theme for consumer lending, I would say. These rates could stay elevated through the year.